Hey everybody, welcome back to the channel. I get asked in my comments and through Twitter messages, people asking me what my trading plan looks like. So what I did is I took my trading plan and kind of stripped out all the things that I don't want to share and kind of made it so it's a version of my original trading plan. So this is the sample trading plan. I am not going to share this. It's in Word. If you want to pause the video and type it out, you need to put it in your own words anyway to customize it for you. In my trading plan that I actually use, I have a lot more added on to this, like for my rules for the Silver Bullet, my rules for the DR and IDR that I trade as well, and I even have a swing trading plan as well. So this is just a version just to kind of help get the wheels turning for you, so I hope it helps. Okay, so I'm just going to go through it. So I have the title of my plan, and I have trade in line with the algorithm, not against it. It's not about a perfect entry. It's about a perfect direction. Trade setups plus consistency equals money. It's just kind of like just words that I like to think about. So my trade setups. First thing I want to do is I want to check the news every morning. I want Forex Factory. And then I create your daily bias, determine the likely weekly expansion, and look for obvious liquidity in that direction. Okay. Then I'm going to mark up my charts before each session, mark out the nearest swing high, swing low, or relatively equal high lows on the daily, 4H, 1H, and 15-minute charts. Because in those places you're going to have buy-side liquidity and sell-side liquidity pools. Then I'm going to mark out my new week opening gaps, new day opening gaps, and the opening range gap on my chart. Most of this is a part of my pre-morning routine, so it's pretty standard for me. And then wait for specific times for setups. And I have them listed here. You know, the 8:30 news embargo lifted, the 8:50 to 9:10 macro, the 9:30 is equity New York open, 9:30 to 10 Eastern Time's opening range, morning macro, the London close macro, the New York macro, you know, all these times right in here. I have no new trades during this time. That's for you guys. I put that in there, but on mine I have only trading DR IDR during this time. So it's usually when I'm looking for my setup for that. So I do trade the lunch hour for that. Then after that, I'll go back into the 1 minute and I'll do my Silver Bullet hour PM session. So then after that, I'm obvious liquidity pool taken out on the 1H or 15-minute chart. We are trading after a market structure shift, so we want a higher time frame liquidity pool to be taken out first. This brings our eye to look for a setup potentially forming. So you're really looking at this first. Like I said, this is not my Silver Bullet hour trading session, trading models. This is just my basic, this is how I trade as a trading plan. You can create your own, don't have to use all of mine. This is just an example for you. Then you find the nearest swing high or low, look left and find the nearest swing high or low and draw a line to mark this on your chart. We want to see a strong energetic move in one direction with a market structure shift. This move must take out the most recent swing high low for it to be a market structure shift. Cannot be sideways movement or choppy. This needs to be a strong one-directional move with displacement that creates a fair value gap. Notice this is the 2022 model, right? Need a proper pullback. Draw a 50% Fibonacci level from the swing high / low that took out liquidity to the swing high or low below the fair value gap candles. The fair value gap is valid if the gap is at least on the 50% level, right? So if we're going short, it needs to be in a premium. If we're going long, it needs to be in a discount. Entering the trade. Place limit order inside the fair value gap and wait for price to come to your entry. Additional confluences. Must have at least one of these to take a trade. Another PD array. Maybe the DXY confluence, clear risk on or risk off conditions. SMT divergence. A currency pair correlation. Something would like to have additional confluence of our trade. Stop loss. Use one or two ticks above or below the top bottom of the 3-candle pattern that created the fair value gap. For an extremely safe stop, use the swing high or low that created the fair value gap. Never open your stop loss up to a larger position. That's a big one for people. Take profit targets, minimum 5 handles, preferably a higher draw on liquidity, like opposing buy-side, sell-side liquidity pools on 1H or daily chart. Opposing new week opening gap. You can have new day opening gap, all that stuff on here. Trade management rules. After 10 candles, if not in substantial profit, plus 50% of TP target, then get out of the trade. I don't usually keep that one, actually. After 10 candles, I will adjust my stop, but usually don't get out of the trade. I don't remember what mine says on my current trading plan, but if a PD array is violated by a closed candle, reduce stop loss immediately. Set up buy, sell limit orders for automatic take partials. Be sure to cancel them after the trade. Very important. If you're not using this, if you're using TradingView and you use the TP or the stop loss, it closes out everything. But if you're using limit orders and you get out of the trade, if you don't actually close them, those are still waiting to be filled, and they will be filled later on. So just make sure you close those out. If multiple open positions at 60% take partials, minimum 5 handles, plus move stop loss to half of original stop loss plus 2 ticks. At 75% take partials. There's just, you got to tell yourself if you're going to take partials what you want to do. This is not how I trade mine, but this is an older trading plan, so this is just giving you some examples. And we want to see our PD arrays being respected. If 3 PD arrays get violated, close the trade. May trail stop loss to top or bottom of PD arrays that should be respected. Risk management, minimum 1 to 2, risk to reward ratio, otherwise no trade, no exceptions. Risk no more than 1% of account per trade. If a loss, all future trades set risk at 0.5% of account per trade until we recoup 50% of the loss amount. Then you can go back to risking 1% of the trade. That's ICT's rule, so I just applied it here. Scaling plan. First order is the biggest order. The second order, if you're gonna pyramid in, is half of the first order. Stop loss must be at break even plus 2 or in profit of the first order. The third order is half of the second order. Stop loss must be placed at break even at plus 2 of second trade. Okay, so that is your sample trading plan. So if you want to pause the video and look through all of this, I just went through it. That's a good sample trading plan. So that should answer the question of how do I make a trading plan and what mine looks like. This is a good sample of what mine looks like, but I have additionals in it. You're going to want to make this your own. So put it in your words, simplify it, and then review it daily.